So thank you, obviously, immediately to Fiona and Dan and the team at Comply First for joining us today at Financial InnovateHER and doing this really timely, very timely, right, 9th of April session. Financial InnovateHER was formed nearly 2 years ago, the whole purpose being to add value. And I think there's no doubt that today's session is really going to add value, especially for fintech firms who, you know, with due respect, might not be quite where they want to be with this reporting requirement. So really, thank you very, very much for today. And we're very grateful. And so just for me, I'm going to leave all of the technical expertise to yourselves. But I mean, we all know that the IPR requirements are in place since the 9th of October last year. And so there's the SEPA and the verification of payee requirements, which you will talk to very well today. And hopefully firms are as ready as they can be, but Comply First are there to help if you're not. And they'll be talking today through all of the reporting requirements from 2022, I believe, up till now. And obviously, we're very aware that the central bank have got this as an EBA overriding requirement for all regulators. So the CBI are going to want us, by us firms and the supporting bodies like third parties like Comply First, to do a good job of making these submissions smooth and as smooth as possible, and as easy to disseminate for them as possible when they're then passing the information on. So just to try and make life as easy for the central bank as we can. I don't say that often, but I think in this circumstance, it's important to note that, you know, the more collaboration we do with the regulators, the better for everybody. They'll continue working with industry, and whenever there's pain points, calling them out and helping them and stuff like that. So look, I'm going to pass over now because conscious of everybody's precious time. Thanks, Fiona, Daniel, Lauren, for all the setup for today, to my Financial InnovateHER team who are always there in the background helping away because I couldn't do it by myself. And thanks to everybody for dialing in today. And just to note that perhaps we'll leave questions till the end, but I do see a Q&A function. So you can pop anything in there as we go, but because it might be answered during the session, I'm happy to open it up as we go. Thanks again, guys.
Perfect. Thanks very much, Sinead. So I thought we'd just do a quick round of introductions maybe before we start. Some of you will know us already, some may not. Sinead, do you want to do a very quick intro to yourself at Financial InnovateHER? I'm sure most people here know you.
Probably should have done that, yeah. Everybody knows me. Sinead, myself and the girls founded Financial InnovateHER nearly 2 years ago. Working with fintechs for 10 years now in different capacities. Represented 30 fintechs at one stage, with the CBI and with government and other public and private bodies, and you know, just really happy to continue to try and help the fintech world in a small way here. So delighted to partner with groups like yourselves. So thanks again.
Yes, thanks, Sinead. And Fiona Jelly here, CEO and one of the co-founders at Comply First. Delighted to be partnering with Financial InnovateHER on this session. I wear the compliance hat at Comply First, so I have sort of 12, 13 years experience of being in your shoes, working in compliance roles at Goldman Sachs, at Citibank and in fintech. I'm a barrister in England and Wales and also a certified anti-money laundering specialist. That's me. Dan, over to you.
Hi, I'm Dan, CTO at Comply First. I'm responsible for all things product and technical here. My background has been FX pretty much my whole career, from the trading floor at Goldman to running the tech and ops at a fintech as well. So I'll be running through some of the sort of technical aspects of the IPR today.
So Dan makes all the XBRL stuff happen in the background. So Dan is perfect for this. So very quickly, guys, on to what we'll cover today. So there are 3 key things we want to cover today. We want to give you a high-level overview of the new instant payments report. A lot of you will be working on this return already, so you'll be familiar, but we're going to try and ground everyone with that 10,000-foot view. Then we're going to move on to what I like to call the grenades to watch out for. These are not trick questions or traps, but these are the sort of key things that you need to be aware of and consider sort of carefully now to get right so that you're not misreporting in the end. And lastly, we're going to wrap up with a step-by-step how to complete each of the 6 tabs in this return. So we're going quite nitty-gritty on how to complete it, because we are kind of very last minute. You know, we're at the last minute now. There's 8 days to go. So firms will likely be at the completion stage now. So we're going to help you guys with that. Just one quick call out on the webinar. So this webinar is for general information only. It's not legal advice. Obviously, we can't know everybody's specific business model and circumstances. And so please double check with your legal team or your consultant before relying on anything we cover here specifically today. If you would like to have a one-to-one chat with us afterwards on any sort of specific business model questions as to how you complete the instant payments report, do just drop us a line. But I think we'll very quickly get into it now. And before I do, I just want to do a very quick poll on where you guys are at with your instant payment report at the minute. Are you done and dusted? Are you making good progress? Have you started yet? Let us know. Take 10 seconds to vote now quickly in the poll, and we'll try and tailor the webinar to where you're all at. Okay. Okay, I think we'll close off the poll now, Dan. So roughly 3/4 of you have started and are making good progress, and around 1/4 of you haven't started yet. So that's kind of where we thought you would be at, and we'll try and sort of pitch that appropriately. So bearing in mind that a good few have already started, we're going to keep the overview of the instant payment report quick. So it's just a very quick 10,000-foot overview. So the legal basis of this report you'll all be familiar with by now. It's under the SEPA regulation, which was amended by the Instant Payments Regulation. And the whole objective and purpose of this report is to give regulators a clear view of your instant payments pricing and any sanctions-related rejections of payments or freezing of payments. And regulators are going to use this data to benchmark you against your peers and potentially challenge any discrepancies that they see. So this report is going to look at two key things. So the first up is charges for credit transfers, both SEPA credit transfers and the SEPA instant transfers, and any charges on payment accounts. So that's the first bucket, is charges. The second bucket is transaction rejections due to EU targeted restrictive financial measures, which is a bit of a mouthful, but that's a way of saying sanctions. So they're going to look at your charges and your rejections due to EU sanctions measures. Now, everybody always has questions around scope, and we're going to get into the nitty-gritty of scope in just a second, but at a very high level, the scope is driven by your firm's provision of SEPA credit transfers or SEPA instant credit transfers on a payment account, and the definition of a payment account, as you would imagine, aligns with PSD2. The other thing to bear in mind is if you are a group, so if you have a parent entity and you have branches, you'll just need to remember that your parent entity will need to report to there's some sound issues, Dan.
I think it's only Colm. Sorry, Colm, I can't seem to respond.
If anybody else could drop us a little note in the chat to let us know if you can hear us okay.
Other people can hear us, so I think we just
okay.
Continue for now.
Hopefully you get that sorted, Colm, but I think it sounds
Other
like the audience can hear us. Okay. So just back to where we were, if you have parent entities and branches, your parent entity will need to report to their local national competent authority. And if you have branches, they will need to report to their host national competent authority. So just bear that in mind as well when you're thinking about scope. And the last sort of point on scope that I'd just like to flag is that there will be PSPs in the room that are potentially Euro member state PSPs. So what we mean by that is the Euro is their national currency. So think a PSP in Ireland, our national currency is the Euro. There will also be PSPs in non-Euro member states, so where their currency is something else. So for example, Poland, Polish zloty. Both of those firms are captured by the report. And if your national currency is not the Euro, you will have 2 additional tabs to complete. So it's just something to bear in mind. There are some additional reporting requirements where the Euro is not your currency. So I think that is the sort of good overview of scope at the minute. As I said, we'll get into the nitty-gritty on scope a little more in a minute. But very quickly, how do you get this report submitted? So you'll need to submit this return to your National Competent Authority in XBRL CSV format by the 9th of April, which is just around the corner. And you must use the EBA's data point model, their taxonomy and their validation rules. So you're likely going to need someone on hand technically to support you to do that, and also help you to debug the various validation errors that are likely to follow when you first upload and run your data against the data point model. In terms of other things that you absolutely need to know, you need to know that this report, it has a unique retrospective requirement. So you need to provide data for 4 years from 26th of October to 31st of December 2022, and then it's full years 2023 to 2025. Another hot tip that I could give you is that you should have one eye on your previous payment statistics data and your payment statistics reports when filling out this return, because some of the data points overlap and are reported across both returns. So just bear that one in mind. And lastly, as we said, if you're a Euro member state firm, there are 4 core templates that you're going to need to complete, and Dan is going to run you through those in just a couple of minutes. Those are really around volumes of sent and received, credit transfers, charges, accounts, so total number of payment accounts, and then sanctions, and there'll be a breakdown on sanctions. So those are the 4 core templates that you'll need to complete. And as I said, if you're a non-Euro member state PSP, there are 2 extra tabs for you to complete. So that's a very high level overview of the return and what we're sort of dealing with. And in terms of the grenades to watch out for, now these are not trick questions or anything like that, but these are the key areas that I think if you misinterpret, you might end up misreporting. So that's why I call them grenades, because they're fairly important. So the first thing to bear in mind is the definition of payment accounts. So payment accounts are in scope for reporting, and they follow the PSD2 definition, which is an account held in the name of one or more payment services users and used for the execution of payment transactions. But only credit transfers are to be reported on those payment accounts. So money remittance, card payments, and direct debits are explicitly excluded in the EBA guidance. The other sort of unique wrinkle to bear in mind in the EBA guidance is the definition of intermediated transfers. So have a little look at that one in the EBA final report. It can commonly apply to PIs and EMIs due to their business model. But if you're not processing if you're processing a payment, but you don't hold the payer's account, the transfer is not yours to report. So take a little look at that one in the guidance, because it might reduce sort of payment volumes, volumes that you have to report, if any. The fourth thing to bear in mind is the parent and branch reporting. So the EBA has been clear that branches need to report to their host, National Competent Authority, and parent entities to their home National Competent Authority. So, for example, it's 4 years worth of returns, and if you have a parent entity and 4 branches, you could end up with sort of 20 sets of files that you need to reproduce. So just bear that in mind, that the branch reporting and the 4 years worth of data sort of racks up quite quickly. Again, on the Euro versus non-Euro member state PSPs, just do bear that in mind, that additional reporting component, and also that Euro PSPs report their credit transfers in Euro only. Non-Euro PSPs report in their national currency and also in Euro. So that's where those 2 extra tabs come in, that you're reporting in both currencies. Around the definition of charges, this is one that we've had a lot of questions and queries on from clients. So they're saying, well, what constitutes a charge? So the EBA have been clear, you need to exclude FX markups and currency conversion fees from all figures, which will apply to a lot of sort of business models in the room. And on rejected transactions, so these are the transactions you've rejected due to sanctions reasons, only report those rejections caused by EU targeted financial restrictive measures. Rejections for any other reasons should be excluded. And lastly is that sort of hot tip that I gave you earlier around ECB payment statistics alignment. The Instant Payments Report, ITS, uses the same terminology as the ECB regulation on payment statistics in a lot of places. So just check that those returns align. You know, if they're not twins, they should at least be sisters. They should be very closely aligned. And if you're not reporting data points in your instant payment report, but you are reporting them in payment statistics, just make sure that you sort of have a sound justification for that, whether it be an exclusion, say for money remittance or some other reason, but just make sure that they align and you've got good justifications where they don't. And I guess I'm going to hand over to Dan in just a second to give us a step-by-step walkthrough of how to complete each tab of this report. So for those who don't work with us, Dan is very much the technical SME on our side. He helps clients understand what data needs to be reported in this report, and he helps them through any validation errors. So he should know this report by the back, sort of like the back of his hand. But before I hand over to Dan, there's just a couple of quick general instructions that I'd like to give you that hold true across this report. So as we were saying, Euro PSPs, you just report the 4 templates that are shown on screen at the minute. So from S0101 through to 4. For non-Euro member state PSPs, you need to report all 6 templates. So just bear that in mind. For Euro transfer charges, always report those charges in euros, regardless of what currency you collected the fee in. For non-Euro transfer charges, report those charges in the national currency, regardless again of what currency you collected the fee in. And you can always use the EBA, or sorry, the ECB exchange rate to convert if you need to on that sheet. 5th point, really need to sort of hammer this one home. Currency conversion fees must be excluded from all charges across all templates. And then the last point, for the reference period, so you'll need to complete each full set of templates. So whether you're completing the 4 templates or the 6 templates for each of those years in the reporting period, and you'll have 4 years. So just bear that in mind for completeness. And that is really everything from me. And I'm going to hand over to Dan now.
Hi, everyone. So I'm going to run through all the different sheets here in the instant payment. So the first one that you will actually need to fill out is 101. And this is where you're reporting the number and value of your credit transfers in your national currency, like Fiona mentioned. So for CBI regulated firms, it'd be euros. And for firms, let's say in Poland, this would be done in Polish zloty. The left-hand side of the template is all about the transfers that you've sent, and the right is about transfers you've received. For sent transfers, you need to start out with your total and then break that down by the way it was initiated, whether it was national or cross-border, and whether there was any fees attached with those. For each of those rows, you'll also need to split out the instant credit transfers specifically. A couple of things to watch here. Firstly, the number of transfers must be reported in whole numbers, no decimals. Values can go to 2 decimals. Secondly, and this point catches people out, the initiation rows don't necessarily have to add up to your total, but your other breakdowns do. And if you're processing batch payments, each individual transfer in that batch counts separately, not as one figure. And I think this is probably the key table that needs to align with your payment statistics reporting. There are a few exemptions under payment statistics reporting that may mean there may be slight differences. But this is where I'd definitely be looking at some of the data that you've submitted to make sure it aligns closely with what you've submitted, because a lot of these breakdowns are in your payment statistics reporting as well. So tab 102 only applies if your national currency isn't the euro. If you're a Euro PSP, skip it entirely. If it does apply to you, this is where you enter separately any euro-denominated transfers that you processed, because these need to be reported in euro rather than mixed in with your national currency figures from 1.1. It's a much simpler tab. It's just one row, total number of value and sent, and the instant breakdown of each. So 201 is around the charges. It's very similar structure to 101, but instead of volumes, you're reporting the value of charges that you've collected. So for cent transfers, you enter the total value of charges, break it down in a similar way to 1.1 by initiation channel, national versus cross-border, free versus charged, consumer versus non-consumer, and then you also include the instant breakdown of each row. For credit transfers received, it's the totals only and no further breakdowns are required. 202 is similar logic to 102 for non-Euro PSPs. If you collected charges on Euro-denominated transfers, you report them here separately, all in Euro. Again, it's a simple table. We just run one row. Table 3 is straightforward, but it's important because the account number here should also be consistent with your payment statistics reporting that you file, because there is a section to file your number of payment accounts. So I try to make sure that this aligns with that. Here you're reporting 3 things. First, your total number of payment accounts at the end of the reporting period. So this is a snapshot, not a flow figure. Secondly, the total value of charges per account. For that, use your statement of fees if you have one, or total fees paid by that account holder. Just exclude any currency conversion fees. And thirdly, the maintenance charges specifically. That's the basic fee for operating the account, which I'm sure you'll find in any of your fee documentations. The last tab is specifically around instant credit transfers that were blocked or frozen due to EU sanctions. So this is not general rejections, only sanction-related ones. And what this makes this a little bit different is you need to fill it in twice, essentially one as the payer's PSP and one as the payee's PSP. In terms of what to include, I'd include transfers that you stopped before execution, funds frozen before a transfer was initiated, and funds frozen after a transfer arrived at the payee's account. All of those count, and then you just need to break it down whether they were national or cross-border. So that's very quickly a summary of all the tables. And I guess once you've filled out this template, essentially the next steps is converting it into an XBRL CSV zip file. It's a very similar structure to how the DORA register of information needed to be submitted, although the underlying CSVs are done more so in a sort of data point model. And like Fiona mentioned, you'll need to submit a separate file for each year of the reporting period. So if you're just regulated in one jurisdiction, it'll be 4 files. But if you've got branches, it's 4 per jurisdiction. So we're going to run another little poll here. We've been doing this with a bunch of our clients and having one-to-one calls with them. So if you'd like to have a one-to-one call with us for any last-minute support, free of charge, we'll hop on and run through any sort of specific questions relating to your team. Feel free to vote here, and we will reach out after the call and support you with any sort of last-minute questions that you have. I'm just going to leave this open for 10 seconds, and then after this, we'll hop into the Q&A essentially.
Yeah, and I think that's helpful, Dan, because we'll try and deal with as much as we can with any questions that arise today. But for those sort of specific business model specific questions, it can be helpful to hop on a one-to-one.
Cool. Right, let's bring up the Q&A.
I'm happy to pop through the Q&A with you if it suits. Actually, we have a couple in. I think that the problem is I don't know what slide the questions were asked in, so let's do our best. We might need some clarification for the people who sent them, though. 12 minutes ago, Fiona, when you were talking, we had a query asking, is it a one-off request, or will this need to be provided periodically, and if so, how often? I don't know, was that relating to the reporting generally? I'd say answer it based on that.
Great question, which I don't think we covered. So the initial 4 years is a one-off backfill requirement that we're doing now. And after we do this, it will then move to reporting on an annual basis. So yeah, great question.
The timing, actually, I have a follow-up to that. I do know this, but my brain has just malfunctioned. when we do the backfill now in April, is it always an April reporting time frame going forward, or are they looking at a different date on that?
That is another good one.
April.
I think it is. I think it remains as April, but you know yourselves, there's not always a clear guidance from CBI or other regulators. So I think it is April, but I just thought you guys might know. All right, there we go. Fionnuala has actually asked it. Okay, sorry, I might just go through these one at a time. So the one-off request one, the other query then 13 minutes ago, Fiona, you were still talking when this came up, was when you say there is an overlap with the payment statistics report, are there numbers that should be identical or sensible? Another good question.
So that is
Dan. That one. Yeah. So the EBA actually acknowledged this in some of their documentation. So they actually said that they know that, for example, total credit transfers are already being reported to the EBA, and also the total number of payment accounts. But then at the same time, they did note that the ECB regulation on payment stats does allow exemptions for some PSPs, which the SEPA regulation doesn't. So therefore, there may be some slight differentiation, but I think generally speaking, they will expect them to align.
Yeah, it's always fun balancing them up, isn't it? That was Killian's question. Thanks. Fionnuala has a good one then. I know the answers to these, but I want to leave you to do them more eloquently than I will. You mentioned at the start that the 2022 to 2025 periods are to be reported now. Are they all due on the 9th of April, or is it just 2022/2023? You might just clarify that.
This is another good question, and I assume this question is coming from CBI regulated firm, because I think they made a little bit of an error in their December regulatory newsletter. So they had published in the newsletter, I think that it was 2022/2023 data that was due now. We actually reached out to them and clarified that it is the full, it's partial year 2022, and then 23, 24, 25 are all due at this time. So I think that was a little bit of an error on there, but yes, they're all due. Because CBA guidance is harmonized across all the member states.
Yeah, they want aggregate data until the start of this year. That was my understanding as well. I don't know if the CBI ever clarified that publicly. I'm happy for somebody to pop it in the notes if they did, or if yourself or Dan know, but that's very useful intelligence, so thank you.
Yes, it was an email to ourselves, so we reached out an email. I'm not sure that they've clarified that publicly.
That's okay. Might be worth popping it on a follow-up couple of comms on LinkedIn then for us just to highlight that. So thanks, that's a really good question. Okay, we've another one in here. In relation to the charges for payment accounts, we don't charge for either the issuance or the maintenance of our accounts. I take it, therefore, that we just put 0 for those questions. That's a question from Colin.
Dan, do you want to take that one?
Yeah, essentially, yeah. I think that, yeah.
Yeah, I would agree.
Accept sort of nearly like a null response as well for some.
Yeah.
I think they just put a 0 just to be safe. I think that'll be fine. Yeah.
I would, though, however, echo your legal warning that this isn't legal advice. Very good warning at the start, Fiona. I sometimes forget to put a legal hat on. That obviously double check with your in-house counsel or your compliance team. Make sure they're happy with it. They might even want to check with their external counsel as well. But that would be my approach, and I tend to ask for forgiveness, not permission, when I'm making business decisions. So take from that what you will. But that would be my approach too. Another couple of good questions. We're a PI EMI from Lauren, and our partner bank settles the credit transfers. Are we in scope?
So potentially not. It would be good to have a quick chat with you on this. Depending on your business model, if you've got a pure remittance business model, you could be out of scope, or if you're doing what the EBA define as an intermediated transfer, which this could potentially fall under, you might not have reporting to do either. So it'd be good to have a quick chat with you on that one just to hear the specifics.
Yeah, so Lauren,
that definition of credit transfers from PSD2 essentially, the issuance of a payment account, and then So
that component of you're holding the payment account and you're doing credit transfers for your customers on those payment accounts. So sounds potentially like no, but just good to double sort of sense check it with us would be good.
Yeah, I'd say reach out to comply first, and I'd say as well that's an interpretative issue within the firm as well, that the central bank are never going to give you legal advice, but they'll, they might disagree with how you're interpreting you're falling into or out of scope of anything. So I'd say that work with a team like Comply First and your own team, and then hope for the best when you go to the central bank. Another good couple here. So Liam says, is there any guidance on creating nil returns, which you mentioned there, Dan, for periods the institution didn't have activity or wasn't licensed? So what do you do for your unlicensed period, say if you're newly regulated?
So if you were to use our platform, platform handles all of the whatever is required within the sort of nil return. So we'll create the XBRL CSV file for you and enter sort of all the necessary sort of zeros, etc., and handle the sort of export into XBRL CSV essentially. I think there might be a couple of questions that require zeros, but the rest can be, I think, left blank.
But
yeah, go on, Fiona.
I was going to say, essentially, Dan, what you're saying is, let's say they weren't transacting in 2023, they'll need to create a nil return for 2023.
Yes.
Yeah, essentially, they'll have to have a XBRL CSV nil return file, essentially named in the right format, and then uploaded to the host regulator, essentially.
Perfect.
Yeah. Yeah. Unfortunately, they're not going to have it tailored to each firm from when you were authorized, right? So that's an unsurprising turn of events. Okay. So we have, does IPO require including payment accounts that hold e-money with restricted functionality limited to executing outbound payment transactions towards third parties only, i.e. no ability to receive funds from the third parties? Vladislav asked that question.
Vladislav, I think we should chat about this one offline, because this one sounds quite sort of business model specific. So we have a chat about this one offline. I'd like to know more details. Dan, any initial thoughts?
My initial thought would be yes, because there's a payment account, it's executing a credit transfer by the sounds of things outbound, but it would just be reported under the credit transfer sent by lending. So
I think it's very business specific. I tend to agree with that interpretation, but I think that certainly Vladislav, it's worth talking to the guys offline on that, because I wouldn't like to say something that will then be taken by another firm that has a different model. So I think that's a good approach. A good one then from Joey. Do we know who is going to review the SEPA instant return from the regulator's side? Is it the supervisory team or the statistical team?
Oh, good question. Dan, you may have views on this. You kind of see these queries coming in.
I'm not sure who at the CBI. I suspect they're all going to get access to the data. The CBI like to cross-check.
One thing we know is the CBI is very hot on cross-checking common data points. So, for example, they're very good at checking your payment stats quarterly matches up to your payment stats semi-annual, and I suspect that they will apply that to the IPR.
Yeah,
they will be doing that for some of our clients. We'll be doing that. We'll be making sure we have all of their sort of payment statistics data within our platform, and then running that sort of variance check against the instant payments report to make sure that it matches up for the years they've been sort of operating. And if anyone would like to avail of that for free for this return, let us know and we can help support you on that.
Because it's a hell of a lot of data when you think it's 4 years of returns, and then you're trying to check that matches payment statistics. And then if you throw in a few branches, you're looking at a ton of files to check. As Dan says, if you'd like to sort of run those checks in a more automated fashion, give us a shout. We're happy to help.
Yeah, I think, look, a non-expert comment on this is definitely agree with your points around the CBI. They try to, cross collaboratively now, make sure that everything is being, and the supervisory team ultimately do have access to everything that goes in statistically. They have to, so that they can make sure the firms are doing their checks and balances right. So I definitely agree with that. Killian, I don't think that's a basic question. It probably one worth mentioning. The fields in grey, Dan, to be left empty, right?
Yeah.
Yeah. The point, so we've one here from Colin, on the point about excluding intermediated transfers, I didn't see a reference to this in the ITS on the report. Could you clarify where this exclusion is stated?
So it's in the final report, and it's in one of the kind of appendix boxes towards the end. So if you control F intermediate transfers, you should find it. If not, just drop me a ping offline and I'll try and find the right resource for you and get that to you. But yeah, it's in like a box at the end of the final report.
Okay. So Joey says here the PSQ and PSSA are reviewed by the statistical team only. Okay, that's good intel. I think that I'm always aware that the supervisory teams can go and get any information they want, but that's useful intel. So thank you. Any other questions?
Loads of good questions there.
Yeah. A really good use of time. And might just mention that Dan and Fiona and the team are going to send out the slides and the recording to everybody who's registered. And there's useful resources, as Fiona's just put up on the screen there. And they've the technical standards themselves linked there, the Excel sheet, and they've just let you know there you can get in contact with them. Their one-page overview. We all love a one-page overview. So thank you for that. And then, yeah, as they say there, the slides in the webinar will follow
later today. Yes, thank you very much, Sinead. And I guess my sort of plea to everyone here is if you could give us some feedback on today's session. So I think we're going to display a little button at the moment that you can click. Am I right, Dan? And,
I see that. I can give feedback, yeah.
Perfect. So if you could give us some feedback, rate today's session, tell us how we can improve, tell us what you would like to see in future. We want to keep these sessions really useful for you. And as Sinead mentioned, the slides and the webinar recording will be in your inbox later today. And just one last thing to note, as Dan was saying, very happy to help any firms that are sort of up against the deadline at the minute with the XBRL generation with one-to-one support to resolve any of those technical validation errors. Or if you have a question on what data should I be reporting, am I in scope, drop us a line as well. But with that, we'd just like to offer everyone their first report on us, free of charge, no strings attached with that. We just hope that we provide value, we're useful to the community, and that maybe you consider us one day down the line for some of your other reporting needs. So that's just a very quick and straightforward offer from us, just an offer of some help.
And I have no skin in the game here, unfortunately, because I'm sure you'll do very well. Unfortunately, I don't have any skin in the game, but I can tell you that I get nothing but positive feedback from your current clients and people who have had help off you. We've inadvertently worked together when there was the Dora returns last year and such like that before we really knew each other. So nothing but positive feedback about the Comply First team is what I hear. So very happy to suggest. My dog agrees as well. I'm very happy to suggest that using the team, even in this last week, will really help you. It can't stand over kind of good service providers like yourselves enough. Yeah, I think that's all. Thanks for the positive feedback, Pat, Killian, everybody who gave their input as well. A very special thanks to Fiona and Dan for giving their time this morning, to the Financial Innovator team, Demi, Karen, Julianne, and Emer as well. I don't know if you're even on, I can't see attendees, but thanks to everybody, and to Lauren for all her work in the background in Comply First as well. And I hope we'll do more collaborations like this because it was very smooth. So thank you so much. Perfect.
Delighted to have done this, Sinead. So yes, if everyone could give us a little bit of feedback, we'd really appreciate that. And we hope to all see you at another session again soon.